What's going on, everybody? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined on this gorgeous Monday morning, July 13th, 2020. I mean, literally the only time it's nice here in Denver is between the hours of 5 and 7 a.m. Otherwise, it is brutally hot. I've seen and I'm terrible with heat, so just forgive me on that. I know I've been saying on the closing bell every day, Stu, that it's a nice day in Denver. It's way too hot. I've got like 9 fans going here in the studio. It's absolutely unbelievable. And speaking of Stu, I am joined by the executive producer of the show, the purveyor of the show, and the publisher and director of the world's greatest website, oilandgas360.com, Stuart Turley. Stu, how you doing today? Don't tell me it's as hot down there as it is here.
Oh, yesterday it was so hot. How hot was it?
It was so hot. I was watching TV with my roommate sitting in my room or sitting in our living room, and we had to set 3 fans up to basically spin at different speeds. So at every point we could be hit. It was a feat of engineering, spectacularity. Actually, I mean, I do have a degree in engineering, so I have to say I was able to fall back on some hard-learned lessons there.
If I'd say it was a beautiful day in the neighborhood in Dallas, I'd be lying. People were laying all over the place in fire hydrants. I've never seen so many people in a fire hydrant.
There's unbelievable. And my house, thank goodness I'm in a basement, but I don't have AC, so it absolutely kills me. And as you know, Stu, I'm always wearing a sweater, so it sweats all the time. But we have a great show for you guys lined up as we digress. Here on episode number 32, we're going to cover a bunch of different stuff. We're going to cover OPEC. They came out with some crazy stuff this morning. We're going to kind of look at some demand numbers and take a look at what maybe's in store for some of these cuts that are coming up. We're going to check with the levels and what happened with the COT this week. 360 official, non-official one is still suspended, but I do have some thoughts on where I think that might go, so we'll kind of dive into that. But first, guys, this show would not be possible without our friends at Adamantine Energy. We love those guys. And really what they're doing is they're asking what is social risk for the energy industry. And really, this is the interesting part. It's not just community opposition to development projects. It's everything from the success of the divest from fossil fuels movement to the investor engagement on all of your ESG programs. These individual states that are setting these crazy ambitious climate and decarbonization agendas. Social risk seems like it's everywhere, moving fast and multiplying like zombies. And that's why you need to be following Adamantine Energy. You need to really be working with them. These guys are helping you prepare for all of the social risk and your options, your response, how your peer companies are responding, and the opportunities that social risk can actually create for your business. They're led by Tisha Schuler, who's the former CEO of the Colorado Oil and Gas Association. She also hosts a podcast called the Energy Things Podcast that I highly recommend checking out, if for nonetheless to try to peer inside the mind and get some ideas on how you yourself can move some of your ESG programs. So it's called the Energy Things Podcast. It's designed for oil and gas leaders who are who are interacting with this problem, because there is a balance. And Stu, you know this, there's a balance between how far do we go down the ESG road to, actually making profit, because there is a give and take with both of these. Now, I think the interesting part is that a lot of people think it's one or the other. It can be both. Now, it's not, you can have your cake and always eat it too. But sometimes, Stu, you're allowed to have a slice of cake and eat a couple bites off of it as well. It's not, as the old saying goes. So, guys, please, if you're not following or listening to her podcast, guys, check it out. Apple Podcast, iTunes, Spotify, Energy Things Podcast. These guys are great. This show is also brought to you by the world's greatest website, oilandgas360.com, where you can find this show, the 360 Digital Closing Bell, on all podcast platforms, iTunes, Spotify. You can find us on YouTube. Follow Oil and Gas 360 on all of the social platforms. You can follow the Energy 360 News Desk, which is the best place for real-time news updates. Guys, check out the Oil and Gas News Desk on oilandgas360.com. Connect with me and Stu on LinkedIn. Guys, this is the most available show on the planet. I put my email in the show notes. You can get a hold of me literally 9 different ways. You should also check out the Energy 360 podcast by Intercom, which is the place for energy industry thought leadership. We're dropping some new episodes coming up this week. Stu, what's on the docket here?
It's Monday morning. Tomorrow, we have.
It's Andrew Dittmer. Is that the Enverus? We did Enverus on Friday.
That was an excellent interview. he did really outstanding. It was a lot of fun with that. And
well, I think he confirmed, Andrew Dittmer, who's one of the 7,000 vice presidents over at Inverness, and I say that with all due respect. I mean, they're a huge company, over like 1,200 people, and they have so many smart people working over there, and he's one of the brilliant guys working in their M&A department. Really confirmed a lot of what we've been talking about, specifically about probably the natural gas is where a lot of this capital is going to be spent, if at all. So it's nice to hear the experts kind of back you up a little bit.
Absolutely, and he did an outstanding job when we sit back. And we also have a really cool article this week, dropping Wednesday. This one is from an Alaskan firm, and they are an electricity provider for Fairbanks. And they have gotten whacked by the EPA, and it's actually part of the EPA. It's the home heating that has driven the city over. And this Alaskan company is providing ESG by buying a renewable biofuel company. So pretty cool story of a energy coal company doing ESG and how they're solving a problem. Excellent.
But I think the other part that I think that, it's a great interview. This company calls Aurora Energy. They're up in Alaska. Basically what they did is there were some regulations that were coming down about the current way people were heating their homes. And if you can believe, I mean, this is sort of what shocked me. People in Alaska heat their homes with wood. It's wild to think about. And so that causes huge amount of not only emissions, but the air quality is absolutely terrible. So they were able to take the existing wood burning fires and convert them into pellet fires, which is basically zero emissions, and they were able to, really, really work on the air quality. And so we really focused on sort of, why they made that choice. But really what it's a sign of is the free market solving an issue. We talk all about, do we need regulations? Do we need the government to come in and regulate this? Well, if you don't, the free market might solve out a problem. And this, I think, is a perfect example of it. And we didn't necessarily pound on that in the interview, but that was my big takeaway was.
The company is ESG and social responsible. They are giving back to the community always.
And that's, it's like I mentioned earlier, have your cake and eat it too. There's a free market solution that chose ESG. It happens. It happens. And so I think that's why we chose to highlight this. That's a great interview. That'll be out on Wednesday, July 15th. Tomorrow, which will be July 14th, you can listen to Andrew Dittmer. Anybody else? Or is it just these two this week?
That's the only two. We got now we're interviewing some folks up in Canada tomorrow.
Yes, tomorrow.
And this one's going to be more of a political shot that we're sharing.
Just what I want to do, chat politics, but I'll come prepared.
Oh, you bet. And it's about pipeline. I mean, it's just.
Yeah, speaking of it, we've got a lot of pipeline stuff coming up. And I almost wanted to spend the first segment talking about the Dakota Access Pipeline. But it's just, it's beating a dead horse in my eyes. Because anyone who listens to this podcast understands that this is just a hit job. That's what's going on. There's no unique take. There's no, there's no interesting way you can spin this and find some story other than this is a hit job. This is going to increase costs on oil suppliers. And it's probably going to end with a reversal, and Energy Transfer is probably going to win this one. They're probably not going to, if I had to guess, they're probably not going to flood it. Or flood it. They're probably not going to, I don't even know how you would, you just stop it and then let all the oil that's in it flow out. I don't even know how you clear a pipeline. But however you go, that's something we'll have to talk with Steven next week and figure out how do you actually get oil out of a pipeline. If it's just flowing, you have to stop it at one end and let it all kind of just flow through. Do you have any idea?
Yeah, you got to put a pig in it, and then you got to run pressure. And
so you just stop it on one end, and then you kind of just keep it pressurized, but let it flow all the way through?
Oh, the pig is, there's different kinds of pigs, and I've had to get in there and pull them. And that is one nasty job, pulling that greasy pig. It is actually called a pig.
Oh, interesting. Okay. See, things as I said earlier, technically I'm an engineer. I'm not an engineer. I have a degree in it, but that doesn't count for anything. I call myself a desk jockey. I'm a lifelong desk jockey. But yeah, no. So I that's why that's all I've got to say about the Dakota Access Pipeline. I mean, Stu, if you have an interesting take on this, other than it's a hit job and probably is not going to end up being, they're probably going to continue to flow. I don't think, if you haven't, say it now. Speak now. What do they say? Speak now, forever hold your peace at weddings. Otherwise, I'm shutting conversation down on the pipeline.
Well, you and I are finishing up a article for the Oil and Gas 360 magazine coming up for the Oil and Gas conference. And in this magazine, the hit job that's going on, so to speak, in the global environment and economics is what we are talking about. And line number 5, this article ran this earlier week, is a perfect example of the horrible impact that some of these things are having. And the consumer, the poor, are the ones that are getting affected by this because the kilowatt per hour price is going up.
That's the key. And that's the exact key, Rob, is the kilowatt per hour. And it becomes almost a regressive tax system. The more you increase energy costs, the more you increase the cost to live, it's a regressive tax on the poor. So you're absolutely right. It's a great article. You got some great facts there. I haven't, I love how I appreciate you saying I haven't touched this article yet. You haven't sent me a draft yet. So once I see a draft, we can dive into more, but I'm sure it's stuffed with great stuff.
I like it. I've been having fun putting it together.
Good. So a part of the reason why we don't need to talk about the Dakota Access Pipeline is because, really the big news item that dropped this weekend was OPEC and their allies, setting who are set to ease oil cuts. Sorry, I was pulling up the article here. Fox Business article that we've actually got up on the Oil and Gas 360 news desk. And I'll just kind of read the top paragraph. An alliance of crude oil producers led by Saudi Arabia is pushing OPEC and its allies to increase oil production starting in August. Officials in the group said amid signs that demand is returning to normal levels. Currently, the 23 producer group collectively has cut 9.7 million barrels a day. They're looking to curb those cuts by 2 million barrels, dropping them down to only 7.7 million barrels a day. So OPEC, after 3 months of production cuts, holding up the price of oil and doing a pretty good job of it. I mean, we were at, if you look at, where oil was, if you go with a 3-month chart here, I mean, oil was, let's just say it was, I don't want to say it was negative because it was negative, but oil was in the teens and cuts brought it back up. And, we're currently stabilizing in the $40. So to say these production cuts haven't worked, it's been false. They've definitely worked. But now the issue is this, you've got companies coming, or you have, top research firms coming out. Let me make sure I get the cut. I want to make sure I get the company correct because everyone's got their own different pricing structures. What was the name of it? It wasn't Rystad Energy. I don't want to put this number with them. We already pick on them enough. I'm forgetting it, Stu. This is why when you do these, here we go. I knew it was close. Rapidian Energy Group. Global demand is set to rebound by 18% here in the next Q3. So that's 2 million barrels right there that in Q3, which started 13 days ago, they already expect to come back on. So to think that these production cuts at 9.9 million barrels a day were here to stay, that was a fool's errand to think that. Everybody, especially on the trading side of things, we all knew this was bound to happen. And the reason why it probably was not bound to happen, but one of the reasons why this was going to happen at some point was Saudi can make money at $42 a barrel. They have the ability to shut in only some of their most expensive stuff, but the majority of their stuff is not, horizontal. I mean, the one thing that I this is just something anecdotally that I've been told. Some of the smartest engineers in the world come from Venezuela. Why? Because that's some of the hardest oil in the world to extract. Saudi engineers, they're not known as the drilling specialists. They do everything else extremely well. But it's very easy. You basically dig a hole and oil comes up. I could probably be a drilling engineer out there. So So when it comes to, so what that means is they can make money, less expensive drill operations. That's like 70% of CapEx goes to like drilling and completions when you want to produce oil. So if that's 10 times lower than every your competitors, you're going to make money at this. The key is the low cost and the small nations, Stu. It's these little smaller nations, specifically, as I mentioned, Venezuela. I mean, they have got a whole host of issues. Nigeria is on the brink of disaster. They need oil at like $60-$70 to balance government revenues, let alone balance oil, and government revenues need to be balanced at $60-$70. They want it back on. Qatar wants it back on. Iran would love this to come back on. So it's not, and really your favorite country, Russia, they want it back on. They need higher oil prices. You were going to say something.
Oh, no. And you are alluding to the whole thing, and it's not the production price that countries need. You said it exactly, and that is, what price do people need to pay? What price do they need for oil to support all their public programs and the government spending? Well,
exactly. And even Saudi needs them a little higher. Now, they have huge reserves that they can draw from. A lot of these countries don't necessarily have the big reserves that Saudi has that can really draw from them.
It's over 50. I think even 55. I'll have
yeah, and that's to just take in more than they spend. They have, somewhere over like $600-700 billion that's just parked in different, different accounts that they can access. So they've got money. It'd be pretty good to be a Saudi resident or Saudi national. Don't you get like just a fat check from the government every year because of oil money?
But right now they're dipping into reserves to pay that fat check.
Well, if you're a citizen, you're not seeing that. You're still getting the checks.
Well, that's part of our international story of depression versus recession and how the green versus all that's coming around.
We're going to apply the podcast for Saudi citizenship so we can start getting our citizenship check every month.
Well,
paid out in riyadhs.
The Intercom Saudi desk. There you go.
I love it. So, that's, so when we look forward, these cuts were, I think anybody who thought 9.9 or 9.7 million barrels was going to stay this way through the end of the year, you were, I think, tricking yourself into something that probably wasn't going to happen. I think you knew before rather than later than you knew. I think the key is how quickly do they take these, how quickly do they bring it down to 3-4 million barrels? It's not, I think this, this is this is the same way. And this is something that, Saudi energy minister, again, I want to get his name right. Prince bin Salam. Prince bin Salam. He is loved and has openly expressed admiration for former Federal Reserve Chairman Alan Greenspan. And if you kind of read between the teams, would love OPEC to sort of act as the oil central bank, that you come to them if you need it. And he would love to have that sort of sway over the energy markets. So the real question that comes from this, I think, is how quickly do they decide to turn this tap back on, and what they do to try to reestablish the price for, and reestablish their price down. It's clear they can control it. The question is how quickly do they cut this off? Because as we'll look, moving into things to watch for in U.S. shale, we ran a couple stories last week. U.S. production is a whole nother animal. And that is, as we can see, could completely balance us out, and it'll be interesting. So OPEC's going to start turning them back on. I don't think it's necessarily a surprise. I think what will be interesting is how quickly they do it. They need to do this quickly, as there's some sources that I'm looking at a Bloomberg article. It looks like they're already, Saudi and Russia are already looking for August delivery and looking to sign contracts. So this 2 million cut, they're meeting July 15th. It'll probably be signed then, but we might have it. And the oil markets knew it. I mean, if you're wondering right now, markets are open it's 6:50 a.m. right now here on Monday as we're watching this. So the pit hasn't quite opened yet. The pit's 9:30 Central Time. Okay, so you're talking 8:30 Mountain. So you're talking 8:30 Mountain, 8:30 Central Time, 7:30 Mountain Time here. So you got about 40 minutes for the pit to open. But this news dropped overnight. Oil only dropped 30 cents. We're holding steady at about 40 even right now. It's only about 50 cents off the index. I think the market, especially on the trading side, had an idea this was coming. And so The real question will be what happens after this and how quickly they decide to pare it down and what happens on the U.S. side. And I think it's a good cue to go ahead and just dive in to the levels for oil trading and what's going on in U.S. shale for the week. As always, this segment is sponsored by Sandstone Capital Group. These guys do insanely good research and provide all the levels from the Energy Glimpse solution. Guys, check them out, sandstonecg.com. Give them a call, 949-561-1818. Tell them the podcast sent you. They will cut you a sweet deal. As I teased, really the one thing we're watching for, at least I am in U.S. shale this week, is, as we know, OPEC is probably going to cut production. Add production. They've been cutting, but they're going to add production back to the market. How does U.S. and U.S. operators respond to that, especially with some of the stuff that's happening in the Dakota Access Pipeline? If they really think that's going to be shut down, there's 570,000 barrels. Probably half of that gets shut in. Probably about half of that probably gets thrown on trucks, but half of that gets shut in. If we've looked over the past 2 weeks, production has stayed fairly flat for the oil and gas industry in terms of domestic production on a week-to-week basis. Only about 11 million barrels, which still I think is a little high. I mean, I would have loved to see that number get down to where OPEC was at, 9, 8, but the lowest we got was like 10.2, I think was 10 even was the lowest number we saw. So still obviously seeing those triple digits. Noble, as we mentioned last week, is bringing on more production. I think you're going to not see U.S. producers bring on as much production as you think. I think they're looking at what happened and saying that if there really is a second wave, they're going to have to just do this all over again. And I think that's really the other theme that's happening in the oil and gas industry is, depending on how deep you are into the news or whatever, there could be a second wave of not just, and I don't mean the virus per se, but of lockdowns because of the hysteria around it. And so if that happens again, and for whatever reason we have to go into a 2-week, specifically the United States or certain states, that's going to impact the price tremendously, even if the short-term demand loss isn't nothing. So, I think what we're going to see this week is some increasing production on the U.S. side. This 40, I think, especially with these cuts coming, and you're seeing $40 hold up. I think you're going to see some companies begin to turn it back on. But I think the key will be what happens Wednesday with domestic production. As always, we will be following. Stu, what do you have on the international news desk for the week?
Let me follow up just on what you're saying a second ago, and that is the American cowboy may be in play here. And that is, we saw the pipeline folks really cover and say, we're going to keep producing.
Yep.
Noble increasing their productions now. Let's take a watch at what America is going to say, because there are folks that are out there saying we're not shutting in again. So it's going to be the American, we don't care, we're going to go ahead and do it. That is a factor that we don't know how to factor in. So anyway.
Yeah, I think at the end of the day, though, these guys are also, they want to make money. And I think make money. I don't know. It'll be interesting because some of these smaller guys, as we ran the first time on production cuts, they don't really care. They have production levels they need to keep in order to keep leases, in order to keep their credit facilities open. So yeah, there is a subset of companies who, to heck with this, we're not cut. So you're absolutely right. But it'll be interesting to see how some of these majors respond who can maybe be a little more flexible.
You bet. Now, we had already talked about the poor folk, which me and you are considered as well, and that is getting hit by cost per kilowatt hour. We ran a story, mammoth heat wave lasting weeks will cause painful spike in utility bills for poor Americans. This is happening around the world. Just ran an article this morning from Australia. Excellent piece put out, and Australia got whacked last year by the fires. I mean, they just got clubbed. Then Australia got clubbed by COVID, just like we all did. They've now got a problem trying to get jobs rolling again. Here's the dynamics going on in the industry around the world. And that is, in Australia, 72 of the largest solar and wind projects are being done by foreign countries. Those Australian jobs are not happening because it's going to solar and green. So there's now a spin to go back to fossil fuel to get jobs. So everybody says fossil fuel or solar and renewables. There is a place for solar and renewables in nuclear. It's how do you get to the cheapest kilowatt hour? That's what the people need. In Australia, it is only systemic, what you're seeing also in Germany. So that's the international news desk to look at this week, is a ton of stuff coming up in finance.
Yeah, and I mean, there's a lot to unpack there, especially, Australia, inside baseball. You guys are you guys are our most listened to country. So golf clap to Australia. We love you guys out there. Feel free to send us any Australian swag. You can find us online at you can just go to Intercom's website. You can send us all the swag you want. But yeah, the kill part where our stuff fires me up because access to low cost energy is the biggest driver, and we've pounded this on the podcast, is the biggest driver that drives people out of poverty, but also turns countries into technological and brings them from third to second to first world style countries. Now, Australia is obviously a first world country, but as you mentioned, jobs. Sometimes bringing jobs back is the absolute key. So, and the fact that it's a lot of foreign countries in Australia, it's a lot of different stuff.
Michael, not to interrupt, but we ran a story 2 weeks ago about what the hell Batman, what the hey Batman. We've got a Chinese wind farm coming in just 5 miles away from a U.S. Air Force base. Why is that not providing U.S. jobs? Yeah. If you're going to put in wind farms, which I believe is solar wind is energy, why use a foreign country? Sorry, I'm ranting. I'm done.
No, it's always good to hear your rant. But I think that covers it. I mean, I think, like I said, watch for increased production on the U.S. side, and I think some of this foreign investment in the international game is going to be interesting. When we look at the crude oil levels for the week, I'm moving the floor up. I was originally thinking our floor for the past weeks was 37.81. I'm going to bump it up to 38.18 and go ahead and just drop that lower level. We'll get the news desk updated with the chart here very soon. 39.09 I think is your first subfloor. We've already cracked that once, and we did that late last week, but we saw a nice run back up to 40. Currently 39.48 is a good long level. Point of control for the week is 40.61, so we're trading below the point of control for last week, which is interesting. I think we have a naked point of contact up at 40.82. So I mean, when you look at price action, I'm bearish because I don't think the structure looks good. If I'm looking at volume, I think this thing's ready to pop. I think 42, 44 could be in the realm, but it really depends on what happens with the OPEC cuts. I think the fact that you saw only a 30-40 cent drop off the news that 2 million barrels is going to be wiped off, traders were already pricing this, and they already understand what happened, and I think are looking for other signals to see about where this price will go. So that's at least what I would be doing. I like to call me I'm a bull bear this week. My bias. Yeah, if I had to pick one, yikes, I'm going bearish. I think we could see 41 at some point. If we see 41.50, I'm shorting. That's what I'll tell you. That's my one piece of advice. If we see 41.50, I am shorting till the cows come home. And that is really supported by the commitment of traders. Managed money, cut long contracts last week, what was last week, all that? $40, $41. And what does that mean? They don't necessarily see the price will continue to rise. Is managed money or hedge funds always right? No, but they control the majority of the volume. So if they don't think the price is going to go back up, you're fighting it. You're basically doing Lewis and Clark trying to get over the continental divide. You're going upriver in a canoe. That's a lot of paddling. Can you imagine that? Trying to paddle upstream on a river? Unbelievable. I just watched the Lewis and Clark doc documentary this weekend, and they did literally like 800 miles upstream in the Missouri River. Kill me now. I'm down just to ride the wave. So the hedge funds, they're short. So that's partly why I am on. I wouldn't have lasted. They were gone 3 years. I wouldn't have lasted 2 weeks before I would have just turned around like, I'm back to St. Louis, guys. This is not for me. I told you, I'm a lifelong desk jockey, and I'm happy to stay in front of my 9 screens. I just need some AC because I'm literally sweating right now. So
I would have loved to have been on that to hear your whining. I would have.
no, it would have, but it would have lasted very shortly because I would have been out of there quickly. I would have been out of there quickly. You know, the last thing I think we need to do is just the moratorium for the 360 non-official fund. You know, remember, guys, the lawyers always make us say this so we don't get sued. This segment is for entertainment purposes only. Everybody on this show, me, Michael Tanner, Stu, Stuart Turley, invest for our own account. We do not manage any outside money. We do not give investment advice. We do not offer securities or have any involvement in the regulated side of the industry. Investing is risky, and you can and will lose your entire principal. Currently still under suspension right now as the portfolio has just performed terrible. I mean, we definitely have some positions. I think we're going to keep that Bonanza Creek position because I like it. I'm out of natural gas, Stu. We're going to pick a new entrance point at some point. Really what I'm focusing on is actually trying to model what a natural energy equities portfolio would look like. I mean, now's not the best time to be if you're trying to raise money for an energy equity hedge fund. Oh my goodness, good luck. That's talk about paddling a canoe upriver. Woohoo! Make Lewis and Clark excited. So we'll do our best we can, and we'll probably be in a lot of renewables. I know LNG will probably be a big staple of us. Probably be a lot of midstream. So, that's kind of where our mind's going. Give us a couple weeks. We're busy over here.
The only ones I'm really back in on are the Geopark. Still digging my Geopark pick. It's up 3.47 this, right now in training, and then you've got Duke Energy is up 1.9%. So I like Duke Energy and I like Geopark. Those are the only two I've stuck with. The rest are.
Yeah, no kidding. Maybe we'll buy we'll get it on the new Chesapeake. That's whatever they rebrand themselves as. That's what we'll get it at.
The Ruh-Roh Peak. What was it? The Ruh-Roh
Peak. Yeah, that'll be not bad. I'm sure that's what their IR guy's coming up with. Anything else for the week, Stu? We're a little over 30 minutes here, so anything else we need to get these guys prepared for the trading week?
I think we're absolutely going to be run amok this week, dude.
Every week seems to be getting busier than the last, and assuming who knows what pipeline will get shut down this week. But with that, we're going to go ahead and just let you guys get back to work. Thank you for checking out the 360 Digital Closing Bell. We'll see you guys this afternoon for the Digital Ticker.